Guys, welcome to yet another episode. This video will be a little bit different. I won't be reviewing a dividend stock, but instead touch on why investing in strong dividend stocks is so great. We all probably know that dividend investing has long been a cornerstone of financial strategies with a long-term outlook, but why is that? Well, there are at least 4 reasons specific to dividend stocks that I can think of. Firstly, the appeal lies in the stable cash flow in the form of regular, recurring, and stable and/or growing dividends. This stability of the cash flow can help you purchase dividend shares during economic downturns and lock in higher dividend yields, as well as future capital gains as the price recovers. Second, dividend stocks historically outperformed non-dividend payers, with dividend stocks returning an average of 9.3% from 1972 to 2022, compared to 6.3% for non-dividend stocks. Third, dividend-paying stocks tend to experience less volatility than non-dividend-paying stocks at all stages of the economic cycle. And lastly, dividend-paying companies tend to have lower risk profiles because their ability to pay consistent dividends requires stable cash flow and strong financial health. Renowned investors like Kevin O'Reilly claim to prioritize investing in dividend-paying stocks, emphasizing the cash flow and stability provided over the long term. Next, let's hear Kevin's perspective on why dividends are essential to his own investing philosophy.
And so when I started to do some research, I found out one interesting fact that changed my investment philosophy forever. Over the last 40 years, 71% of the market's returns came from dividends, not capital appreciation. So rule 1 for me is I'll never own a stock that doesn't pay a dividend, ever. Number 2, diversification really matters. So I never want to own more than 5% in any one name, and you know that really works when you go through periods like 08, 09, where you have volatility in sectors. And number 3, when you start to look at capital for multi-generations, you want preservation. So I thought I'd go to the ETF market to solve for it, and I found out something very interesting that I think others have found out recently as well. The first generation of ETFs are market cap weighted indices. So over time, when companies grow their market cap, they become an inordinately large piece of the index. And if I have a covenant of 5% market cap weight in any one name, most of these ETFs I can't use because you get 4 or 5 names represent 40, 50, 60% of the index. Sure. So I went to the FTSE Russell guys and said, look, my rules are simple. Can you give me a new index that meets my 5% market cap weighting, 20% in sector, but above all, lower vol, and I want 50% more yield from the index than the generic index? Can you design something like that for me? I have a fair amount of capital put to work. I thought that these rules would be of interest to other investors. That was the genesis of O shares. We created something new for the ETF market. It's a new generation.
You know, one of the things you're speaking about is preservation of capital, companies that pay dividends. So much excitement and buzz around the stock market during periods like we've been in for the past few years goes to the other side of things, the really hot stocks, the things that run up by crazy amounts. This sounds to me like your strategy is going to avoid the distraction of worrying about when the Ubers of the world will come public and how Facebook stock is doing. You're in a very kind of, you know your corner and you're sticking to it, and it's been successful for you in the past, so that's why you're continuing with it, right?
Yeah, I think there's other reasons too. If you look at the volatility in the market around names that don't pay dividends, they're extremely volatile because there's no cushion of yield. What's the value of a stock that never returns capital to its shareholders? I don't know, because the only way you can make money is if somebody else is willing to buy that position at a higher price for some emotional reason perhaps, or for some foresight that maybe the company will return capital one day. And I think of when you learn as an investor over multiple decades is the only thing that matters is free cash flow. That's it. There is no other reason to own a stock.
Let me know what your thoughts are on this in the comments, and if you found this video had any value to you, please hit like and consider subscribing for more quick videos on dividend stocks and dividend investing. Have a great day and see you next time.